I want to bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, another day, another milestone, KG. So we had the S&P 500 crossing 6,400 yesterday. It feels like we're reaching level after level. What's your take on where things stand now?
Yeah, obviously yesterday when it came to the CPI report, it came in line, let's say, with the street's expectations. And on the goods front, once again, maybe a little bit better than what the market had feared from a whisper standpoint here. And that's why we saw the market obviously gain a lot of steam actually yesterday. If you're looking at the S&P 500, breaking through that 6,400 level, getting to around 6,430 or so for the day here. And you actually saw an expansion of market breadth. You actually saw obviously risk-on trades being placed, and maybe some of these sectors that are a little bit more defensive seeing some selling here. And we also had yields moving higher, which was actually very interesting. That's kind of like early cycle behavior. Basically, risk on days, you sell out treasuries and then you buy equities. That's exactly what you want to see in this type of environment, especially if you're going to start a new overall bull run. It's been a really bullish run since the April lows, but since we are now getting to new all-time highs here, you'd like to see this extend up aggressively over the next couple of months. And when you're looking at the small caps, as you kind of called out, you are starting to see some risk on tone there as well. Regional banks were up over around 3% yesterday, and that's something that's very notable. In order for the small caps to really try to sustain the advance in prices, you really want to see the regionals really outperform. Once again, pricing in the fact that we probably will see a Fed rate cut in September. Now there's conversations about maybe a potential 50 basis point cut in September. I think that remains to be seen. We probably will still need to have some economic data in order to confirm that, especially on the labor front. But overall, this is actually a really good setup going into PPI tomorrow. And then PPI just in general, not something that we really focus on too much, but obviously it will be something that we will highlight here because of the intermediate goods, or the goods that are being shipped into the United States, and then those that are being processed for final goods. And what is the impact of inflation on that number? It's a lot more volatile, harder to be able to predict here, but if we actually do have another number that comes in line or lower than the street's expectations, that could give us another reason for markets to move higher here. So pretty decent setup going into today's session. Let's see if we're going to be able to hold some of these levels, and hopefully the news front is not bearish.
Yeah, so it's so funny that you mentioned the point about how much, because it's not the question of will we see a rate cut now in September. The odds increasing right across the board, and you seem to have the data that confirms that, but it is how much is the question. I've seen some commentary over at Bloomberg from Rick Reeder, who's head of fixed income for BlackRock, saying that as a result, we expect the Fed to begin cutting rates in September, and it could be justified cutting the funds rate by 50 basis points. Now, I know the key there is could. Are you seeing similar commentary that it's not just about when, it's how much?
Yeah, definitely. Actually, Scott Besson is speaking right now on Bloomberg and kind of saying the same thing here as far as 50 basis points worth of cuts. I think it kind of depends on the signal to the market, Diane. 50 basis point rate cut because inflation is moving to and closer to Fed's target. Obviously, that's going to be a bullish thing. 50 basis point rate cuts because of the labor market statistics showing a potential slowing in the economy and in labor, which is usually the last domino to fall anytime that you are in one of these cycles, and it actually does take a significant amount of time to try to see that rebound here. I think that's actually another thing. Right now, I think we're in this kind of Goldilocks type of scenario where, yes, inflation's a little bit sticky, and the labor reports, obviously, we did see a massive revision to the downside here, but some of that might be a little bit seasonal, and I think the market's probably pricing that in. And the grand scheme of things, 50 basis points to 25 basis points, is it really going to impact the economy starting in September? Probably not likely, but it's just about the signal to the market. What are we going to be kind of looking for moving forward here? You just got to be very cautious and be careful what you wish for. 50 basis points of cuts because of economic slowing is a little bit of a different signal than 50 basis points because of the all clear of going to the Fed's inflationary target, if that kind of makes sense there.
Okay, yeah, and let's talk a little bit about, we're paying attention to all-time highs in equities, but crypto catching a bit as well. And so far this year in that sector, Bitcoin has been the belle of the ball, but Ethereum's been playing some catch-up, and now investors in that space are saying expect records there. What are you paying attention to there?
Yeah, a lot of enthusiasm when it comes to Ethereum. I think there's probably one, a little bit of a catch-up trade that's taking place right now. A lot of enthusiasm, and then two, you also have some ETFs that have been launched that's really focusing on trying to purchase Bitcoin, and actually one of them is actually Bitmine, and so this one is being led, or kind of the face of this ETF is Tom Lee from Fundstrat, a popular analyst. I know you know who he is, and actually yesterday evening, the announcement that they're trying to raise another $20 billion in order to buy Ethereum is really one of the reasons why we were seeing Ethereum move to the upside here today. Two different types of technology when you're looking at the infrastructure, but at the end of the day, once again, catch-up trade that's taking place here. You have the positive institutional flows that are also taking place. The options flow on a lot of these Ethereum ETFs has been very aggressive over the last month as well. That's also probably leading to a move to the upside here when you're looking at some of these derivatives products like the futures contract that we're looking at right now. So this has been the environment for Ethereum, and let's see how long this actually can go for, if we're going to continue to see this move to the upside. But once you start having players that are trying to implement the same strategy as MicroStrategy, or now what is called Strategy, where they're trying to issue either convertibles, issuing debt, issuing new shares, or what have you, in order to raise capital to buy an asset like Ethereum, obviously that's going to be a positive thing when it comes to the price action to the upside. It's just, mechanical institutional flows right now that's also kind of boosting this up, along with retail trading and maybe some even, institutional trading that are on the speculative side and not really trying to cover or try to expand their position because of an ETF or other holdings.
Yeah, crypto in focus here at the stock exchange today as well, with bullish set to go public, set to ring the bell today. You got the former president of the New York Stock Exchange leading that company. Let's talk a little bit about Coreweave. That stock is under pressure off the back of its latest quarterly results. Can you run through a few of your takeaways here, KG?
Yeah, obviously, the stock is trading at a pretty expensive premium, and let's say the report was a little bit mixed. We are seeing the shares down in today's session so far, but you are seeing revenue that came in at $1.21 billion. Street was looking for around $1.08 billion here. So you did see a decent increase on a year-over-year basis, about 3 times the growth that we've seen on a year-over-year basis. But the adjusted earnings per share actually came in at a loss of 21 cents, and their operating margin fell to 2%. That's down from 20% a year ago. So really what's happening here is maybe a little bit of concern about the debt issuance and the debt load and debt ratios for Coreweave, as well as the fact that their costs or their expenses have increased and they're not really able to offset that right now with revenue, which is obviously eating into margins here. So a little bit of a pullback right now, but when you're kind of looking at the outlook moving forward in the business deals, is still doing a fair amount of business here, getting some hyperscalers on the books. And if that trend does continue over the long term, that could be an overall tailwind for this name here. Their backlog came in at around $30 billion. That continues to show a significant amount of strength. So once again, it's an IPO, just IPO'd a couple of months ago. We have to still get used to some of the valuations when it comes to this name here. But when you're looking at some of the high level qualitative type of information that's coming out from this company, it seems like they're doing the right things in order to try to capture market share right now.
Okay, and then KG, we busted through your levels on the S&P 500, the upside yesterday. So we're at 6445 today. Where do we go from here to the upside or to the downside?
Yeah, to the upside, 64.70, and then to the downside, you're seeing support at around 64.05. So let's see how that actually pans out here. A little bit more of an upside, potential on the call side basis right now, and you're seeing activity in the options market for the SPX in early trading here. So it's definitely sitting as a bullish setup, and then once again, kind of giving you the fact that we have some information tomorrow that also could kind of reaffirm the inflationary picture here. I think the market's trying to brace for additional upside here over the next couple of days.
All right. Thank you, KG. Thank you for the targets and beyond. That's our Kevin Green, Senior Markets Correspondent.